Epstein with your metal market wrap-up, and this wrap-up is for the evening of Monday, the 8th of April, 2024, 6 p.m. Central Time. Well, tomorrow we do have some economic data to look at. You had no reports today, but none of these are big ones. You've got the National Federation of Independent Business. That comes out at 5 in the morning, Central Time. Redbook Group comes out 7:55, and at the end of the day, the API numbers. What the market's really gearing up, though, for is Wednesday CPI, the European Central Bank Thursday, and PPI numbers, U.S. PPI, on Friday. The big number of the week, in my opinion, will be the CPI, and I would trade it as a major number. If it comes in very hot, new problems. Now, we keep hearing about CPI coming down, but I don't know if you saw Blackstone's deal to buy a large REIT. And in doing so, it's the biggest deal I think they've ever done at $10 billion. So they're not betting that properties are going to go down in price, which flies right in the face of the Fed. Now, Blackstone isn't the Fed, they don't control, but they also bought a single-family REIT just recently, a big one for $3.5 billion. So they are obviously betting that long-term, no, you're not going to see much of a decline in housing. It's here to stay. It's here to stay, at least in the short term, in a tight situation. And I doubt they're buying with the idea that rents in this new $10 billion REIT is going to fall very much. So something you have to watch on that to get a really good idea. I think that's important. When we look at the gold market, obviously the gold is very nervous about Iran, Israel. Is it going to expand? Iran did get a new, if you will, embassy, I guess you'd call it, whatever you want to call that building that was in. If it was an embassy, it was attacked, destroyed, and they've got a new one going there. Israel claims it may not have been that, but who the heck knows? What I know is the gold market is up another $12. It's sitting here up a 0.5 percentage point. It was everywhere today. First, the disappointment that nothing happened. Now, when I say disappointment, markets, when you put a premium and you buy over a weekend, normally you're looking for an event to take place. It didn't get it. The market dropped fairly hard, and then it came roaring back late in the day. So this is a market that did itself all right. The pattern is still one of higher lows and higher highs. The trend is still up. As you take a look at the moving averages, they're all underneath the market. This particular average is very far away from where the last break low was, $40 away. So if the market were to start a big break to try to get back to the 18-day average, it would void the uptrend. It wouldn't start a downtrend under this pattern, but it would void the uptrend at this point. Okay, where's the resistance? You're running it. You're right at the upper Bollinger Band. So you had several days, actually 4 days in a row, where you got yourself over the band. So you can see what the market did, all right? This was Friday's close. You were over it. This was Thursday's close. You were over it. And let's go to this close, which was 2308.5, over it. So you've had 1, 2, 3, 4, 5, 6, potentially 7. Okay? This stretches gold out to numbers I haven't seen in a very long time. Go back and count on your chart. Tell me how many you can find where it stays over a Bollinger Band like that. So it's not a sign that the market's super overbought. It's a sign of strength. It tells me that on pullbacks in the market, there are willing buyers. You're developing the bullish embedded reading, which means the first hard break in the market probably finds excellent support. As shorts go, get me out of this at any price, and longs that want to get in are going to wait under the market and try to figure out what a good deal is. In the gold market, I think we should, and I'm going to say goodbye to our good friend April Gold here. I'm going to put up now the June gold versus the May silver, but we might as well finish up today. You can see that the market's trading at 83.49. Okay, I can live with that. That means, by the way, it has come down. Where you needed just recently nearly 91 ounces of silver to get 1 ounce of gold, now you only need 83.5 ounces. So silver's gotten, on a relative basis, stronger than the gold market. You can see where you're at. Let me get to the next chart. I want to get to the next one right here. You can see in the silver, It's not like gold. It hasn't had 7 days in a row practically over the band, but you certainly are getting your string of them, and you're in the process trying to get the market to embed. It's fighting the embedding. It's a very overbought market, unlike the gold that is about to embed. I'd be a bit cautious up here is all that I'm saying. At any point you can get a snap in some of these markets. Copper, the same thing. You're going to try to embed that. So metals have come alive, and they're coming alive, and I gave you the reasons that I think they're doing this. The next big steps between now, April 8th, and sometime in June is probably the European Central Bank making a rate cut. Maybe we'll hear from the Bank of England. We'll hear from other banks in the area. Once one big one goes, which the Swiss did, but they're not as big as the European Central Bank. Once one big one goes in Europe, the rest will try to follow suit. And as they follow suit, the idea is to spur on their economies. Germany wants it terribly. Their economy at least is finding a near-term bottom, so their arguments are, let's keep this going, blah, blah. But that means metal demand, inflation demand comes back. The U.S. is the other end of that spectrum. It is saying, hold on, folks, we have full employment. Now the question is, what is CPI doing? If CPI is a strong number on Wednesday, I don't see the argument that the Fed is going to use the current set of numbers to make a cut. Maybe you'll have weak numbers from April and May. I don't know. I can't, I'm not a fortune teller. But from what I can see, it's going to be a very difficult road at this point for anything around June for the Fed. I cannot reach out 6 months and tell you what that's going to look like. Others have tried and they have generally failed. In the platinum market, higher lows, higher highs, and you're right up to the resistance at the upper Bollinger Band. And last in the dollar index, we're zigging and zagging as the market is now marking time, is it wants to see the CPI number, finally the PPI, and then it's going to go, well, we can wait until then, the end of the month, until we get to the next jobs report in terms of what the Fed may do, and then it'll be all reports about how strong or how weak the economy is at that point. Remember, you have earnings season and the banks coming up as well, so you got an awful lot this week that's about to happen. These past, which today and tomorrow will be your quiet days, and from there I think things are going to start picking up on you rather aggressively. And to take advantage and learn what I talk about here is so darn simple. We make available to you this beautiful set of indicators, volumes 1 and 2. So it's quite a bit. Full graphics as to what we're talking about on charts. Chart patterns laid out for you. They're all printed out there. Trend lines, how do we draw them? What do you do? The different types of moving averages. And yeah, there are many different types. Market sentiment for some traders, commitment of trader reports, then the different cycle studies, the Arun indicator, price and time, Elliott wave, the cycles in the market, the options primer, money management ideas. Put it all together. I think this is something you'll like to see. It's from our good friends at Modern Trader. How do you get it? Go to iraepstein.com, free offers. Move your cursor up to the top here as well. And when you do so, you'll see an icon. Just give that a click and it'll take you right there as well. And look at our other free offers. They're all there for you. I'm Ira. You have yourself a great day, and I'll speak to everybody tomorrow. Take care.